Good morning and welcome back to Almus Market Mornings. It's a brutal start to the week. Meltdown Monday in full swing. Global equities are in the deep red with Japan's Nikkei down 8% and the US futures pointing sharply lower. Trump's take your medicine remark has only added to the unease as tariff shocks ripple across the markets. Yields continue to fall and even gold isn't spared. Though there is quite a bit of volatility, and while I say this, a lot of things are continuously changing. JK, is this just a market purge or is it the beginning of something deeper? What's your take?
Hey, good morning, Suraj. It's very difficult to say where this is going to end. Of course, uh, the kind of moves, seismic moves that we have seen in the last 1 week, is probably most market people were not prepared for it. Because although we have seen such moves earlier, those were triggered by black swan events like, COVID, global financial crisis, and all that. I mean, there were some systemic issues that arose, and those led to the market sell-off. But this time it is a deliberate policy move, which would not have which would have actually envisaged the kind of move that we are witnessing. So that's the difference. But yes, the moves so far in the global market, still Friday at least, has still wiped out 5 trillion in the value of the stock market, particularly in S&P 500. And from Monday last till now, we have, or rather, from the day the tariffs were announced, we have seen US markets lose almost close to 15%. Now, to your question, whether we are seeing something deeper, I mean, that is what the administration, at least the Fed, not the government, would be hoping for, because they are in the most difficult position. The tariffs can actually bring in inflation, though it may be transitory, it may stay for 6 months, but the market meltdown, and maybe which if it brings in some systemic failure or institutional failure, yeah, because of the losses and also the margin calls, etc., then they will have to take actions. And if they, it's very difficult to see them act like they did in the global financial crisis. In the meantime, authorities seem to be don't concerned about what, at least from their statements. Like Trump said, you have to take some medicine sometimes, and the uh, Treasury Secretary Besant was quite defiant, in the face of all the moves, saying that the new tariffs were necessary and rejecting the idea that they would cause a US recession. Of course, he gave no indication the president was willing to back down on the sweeping new tariffs introduced. He said more than 50 countries had called the administration seeking negotiation, but any talks are going to take time. So they actually, nothing is talked which would suit the markets actually. From the responses of the other countries, we have already shared that the China has imposed a retaliatory tariff of 34%. Most other countries are taking a wait and watch attitude, to see whether the environment would improve. And there are some countries like Taiwan being one of the majors, who have actually agreed to reduce their own tariffs, so that US adjusts their tariff against them. But I think in broad sense, the government in US is not backing down right now. So I think the market, till then, the market is likely to continue. It's very difficult to put down any number where it can see a bottom. I won't say it's a bottomless pit, but markets have to adjust themselves to the new, not only the new situation, but also to ensure that the system is safe and there is no major institutional failure, etc., before they can actually start to do some, even think about some bargain entering of deeply oversold stocks. So that is the situation. I think everything else takes a backseat, and tariff related news is always on the radar of traders and investors, and a lot more definitely is on the cards in the coming days. We'll keep you updated on that on an ongoing basis. In the meantime, we had the job numbers. So the strong job numbers from US was seen. That actually felt like an ancient history, because that's a job number pertaining to March, and what we are going to see in the coming days as a result of the tariff related meltdown in the markets, the consumption which will get affected because of the asset market collapse, collapse and the the wealth erosion effect on the public. Besides job cuts, which can further increase as institutions cut down on their expenditures, already adding to the layoffs that the government has done and the expenditure cuts that they have already implemented. So I think this job number was one of the most irrelevant numbers, although for the record, I would say US added 228,000 in March. The expectation was around 155,000, and unemployment number slightly inched up. The overall it was stronger, but once again I have to repeat the fact that this is looking like a ancient history, and of course even the wages can in the coming days see a lot lower, because companies will not be spending so much in the coming days, and there will be more unemployment that can be expected with all these developments, and employers will be calling shots as far as the wages are concerned. So that's the only major number that we have had. Of course, this week we have our own RBI MPC number, which will be important. And going forward, we will also have the inflation numbers from US and India that will be important for the policy, and also how they get shaped up in the face of the recent developments in the economy. As far as India is concerned, so far things have been stable. Although today it does look that there will be a catch up by our own Nifty. Futures are showing about 800 points down, or about nearly about 3% down from where we closed on Friday. Rupee has seen some resilient behavior, because even after touching 84.95, the move that we've seen on Friday, including the offshore move, was less than 1%. And it does appear that market is preparing itself for medium term dollar weakness. In fact, dollar has also not bounced in meaningfully in any of the pairs. Although in euro we have seen about 1.5% correction, but that was very much needed because euro had moved quite swiftly in the last 10 days or so. So that's a normal correction, but definitely our own view on the dollar is much weaker going forward, and that's the factor probably that Indian rupee is also factoring in. Although, as far as flows are concerned, in March ending, we saw some positive flows from FIIs. But in the month of April, first 3 days at least, we have seen only negative flows. We don't know. Looking at the moves that have happened in the Dow, including the futures today, there would be massive losses for many investors. And if there are pockets of profits in the Indian market, including the Indian bonds, they will be keen to lock in some and make up for their losses elsewhere. And that is where there can be some more outflows from India, and a marginal pressure on the Indian rupee as well. And important to note that even the central bank has not stepped in to buy the dollars, even at the lows around 85, and we have only seen the normal importer buying. Rupee might move between 85 and 86 for this week, and keeping an eye on what happens on the global front. Indian government has not given any official response, but it will be coming forth in the coming days, and the Commerce Ministry in the meantime is in engaging with the exporters. So we will see what measures will come by way of support, maybe some fiscal support from the government if the tariffs stay the way that they have been announced. So all in all, prepare ourselves for another tumultuous week. Thank you.
Thank you, JK. And I think the way things are going, it seems whenever President Trump sneezes, somebody in Asia is getting a margin call, especially on the equity sides. Things
Yes.
have been quite crazy. So I think just quickly summarizing what JK said, apart from the regular updates, there are some data which we need to look forward to. We have the rate decision by RBI. At the same time, we have got inflation numbers from India and the US. this week domestically. We would also be looking forward to any sort of updates from the government on the tariff related conversation, because there has been a lot of conversation as to how it impacts our exporters. So any update with respect to that would also be looked forward to. In the meanwhile, in the meantime, let's just buckle down and manage what's going on with the markets. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.